Hello, welcome again to FAIRtax Power Radio. I'm Bob Paxton.
I'm Bob Scarborough.
And we are the FAIRtax Guys.
Howdy doody there, Bob.
Howdy doody, I'm doing good. Glad to hear that all of the ice and snow has melted off of Trade Street there in Winston-Salem, where the radio station is located.
I said goodbye to that last little piece of sludge that was icing up my parking space. I had to park on top of it for like a week and a half. So it's all gone. This morning it's all gone, melted, done.
All right. Well, hopefully we won't get any more of that. And let me say real quick, if you missed last week's program, we had a rather interesting discussion with a congressional candidate from Texas that John Gavers brought our attention to, fair tax supporter. Again, we can't do any electioneering here, but we can let folks know what people are standing and what they're standing on, what they're thinking. And so check that out in the archive if you hadn't seen it already. But since we had a guest last week, that means that we did not have time to do a Congress.gov segment.
That's right.
This week, we are back to our normal doing, so we can get right into that. And I tell you, the Congress critters have indeed, they have been busy. The Congress is back in session now. They are all kinds of things. What we do, we put the words Internal Revenue Code in quotes in the search bar at the top of the Congress.gov page. Select legislation in the current Congress. And as of today, when we're recording this show, 1,584 hits on that search, which means that the Congress critters have again indeed been busy making the tax code bigger, making the tax code more cumbersome, making the tax code more unfair, making the tax code more incomprehensible, and all that other stuff, all the reasons that we need to get rid of it.
Sir.
So let's see what they've been up to. First item on the agenda today is H.R. 7160. This is from, I'm not even going to try to pronounce that name, but it's a representative from Illinois District 8. I mean, he's got a name long enough you have to carry it around in a wheelbarrow. But, here we go. Let's see. This is the First Home Affordability Act. And all of these have text in them, so it's going to take an extra step to dig down and see what these are. This is a bill to amend the Internal Revenue Code to establish the first-time home buyer refundable tax credit. Tax credit for this, tax credit for that. The Congress critters are constantly using the tax code to try to either, help their friends and punish their enemies, or to influence the decisions that we make. And I guess it's a good thing to try to help people buy their first home, but do we really have to make everybody else who is not a first-time home buyer, finance their issue? Because that's what you're doing. You're taking money from everybody else and you're giving it to the people who are buying their first-time home. Not fair, shouldn't happen, does not happen under the fair tax.
Right. Yeah, that's just picking winners and losers. People, the lobbyists have ulterior motives, or they just in business. They're doing their job for their clients, and so that's why we have the tax code as convoluted as it is because of all the little carve outs and specifics that take place for the businesses and industries and those that can afford to have somebody go up there to Washington and knock on the doors of the representatives that we elect.
Yeah, I tell you, and it's not that some of these people that we're trying to help through these things are not worthy of the help. It's just that it's not fair to give tax breaks to some people and not others. And that is exactly what the income tax does, just in abundance. Well, the fair tax treats everybody the same, gives everybody their basic necessities tax-free. Beyond that, the more you spend, the more you pay. End of discussion. Which brings up our next item on the agenda, H.R. 7157. I can pronounce this one. This is Representative Cleo Fields of Louisiana District 6, the Supporting Teachers Through Tax Fairness Act. And this one's always pretty simple. It says to amend the Internal Revenue Code to exclude from gross income. Again, we're trying to, some income counts and some income doesn't. To exclude from gross income up to the first $50,000 in wages from employment as a K-12 public school teacher. Again, K-12 public school teachers are vital people. We need them, and they are certainly worthy of some help along. But if you're going to exclude the first $50,000 of their wages, why not the first $50,000 of your ambulance drivers, from your medevac helicopter pilots, from the people who drive the trucks that bring you everything you need in the grocery store? When do we start saying who is and who is not worthy of getting a break like this? And again, I guess the teachers union is probably behind this one for sure. But if you've got a strong enough lobbying effort, you can get yourself a tax break. And this just drives you nuts. You want to say, why are we having such a convoluted system? Why don't we have one that treats everybody the same, regardless of how much you make, regardless of what kind of work you do or don't do, and nobody gets a break that nobody else gets? And it's just drives you crazy to look at this stuff.
Absolutely. And Congress.gov, if you have 30 minutes or so, you can jump in and do the searches like we do. And you'll see and so, like Bob said, some of them are worthwhile and others are questionable.
But yeah, K-12 teachers are certainly, worthy people to get a break like this. But so are the firefighters, so are the police officers, so are your medevac pilots, so are a lot of other people. So you just shouldn't be getting a tax break based on how strong the lobby is that represents what you do. Treat everybody the same. Get rid of all this junk and replace it with the fair tax. Now, this is an interesting one. HR 7138. This is a Representative Ro Khanna of California. This is called the Stop Wall Street Landlords Act of 2026. You can kind of figure where this is coming from real quick. And this is a bill to amend the Internal Revenue Code to disallow the deduction of certain expenses relating to ownership of single-family homes by specified large investors. Also to impose an excise tax on the sale of such homes by such investors, and to prohibit federal mortgage assistance relating to certain large investors. This person doesn't like large investors for some reason and wants to deny them their deductions for certain expenses relating to owning single-family homes. Don't you just love political agenda pushing through the tax code?
Oh, and it happens more than we realize in some cases. And it's interesting that this person, Khanna, is from California, and Wall Street landlords. I guess that's like the hedge funds that are coming in and buying up single family homes now. I think I've seen that in the news that's taking place. So, maybe this is something that helps curtail the wholesale purchase of single family homes by large corporations, which basically sends the price through the roof when it's time to go, resell them.
Okay, well, this one caught my eye, HR 7131, the Middle Class Home Tax Elimination Act. Middle Class Home Tax Elimination Act, Representative Scott Fitzgerald of Wisconsin. And you open that one up to where the text is, and it tells you that this is a bill to amend the Internal Revenue Code to eliminate the dollar limitations on the exclusion of gain from sales of principal residences and for other purposes. I don't know what to say about that. I just let that one lie.
Home Tax Elimination Act. Yeah, it's very, very cryptic. Very cryptic.
Okay, well, here's one that it's funny somehow how the titles don't necessarily reflect what the bill actually does. Let's hope that's not the case here. This is HR 7115, the Jumpstart Savings Act. I think everyone agrees, economists all across the political spectrum agree that savings is a very important part of having a healthy economy, and it's a good idea to try to jumpstart savings. And this is a bill to amend the Internal Revenue Code to establish jumpstart programs for saving for apprenticeship and trade occupation training and for other purposes. Why don't we just jumpstart savings by not taxing it?
But hey, it puts more money in your pocket. That's always a good thing.
Okay, well, I tell you what, that's our look at Congress.gov for this time around. It's just incredible what those Congress critters are doing. And again, we let them get away with it. Because a lot of people, I think we're the only people paying attention to what's going on up there. If you ask a man on the street out there, go out and take your microphone out on the sidewalk there in front of Trade Street there and ask how many people know what the Congress critters are doing to the tax code, and they look at you like you got six heads.
Well, yes, and that's a challenge because so there's some folks that do know and understand it but don't do anything, and then there's some folks that have no idea what's taking place. They're
Oh, okay.
concerned right now with getting their taxes done and then heading to the large appliance store to pick up a giant screen TV.
Well, I did my taxes last night, believe it or not. Again, a relatively simple return. Took me an hour. They timed me. I did this online with the tax preparation software. They said they started the timer on me. They said, "Congratulations, you finished your taxes in an hour and 14 minutes."
Oh my
I
goodness.
guess that's good for most folks. A lot of folks spend a lot more time than that on that. But again, I've got a fairly simple return. I've got Social Security, I've got my pension from the state, and my wife has her Social Security, and we do have a small brokerage account, but that's it. That's it. We don't have a business. We don't have all kinds of deductions. We don't have all kinds of other stuff that people have to disclose on their tax return. And it still took me well over an hour and 14 minutes to do my taxes. That's crazy. If you had the fair tax, it would take me absolutely zero time whatsoever because you just pay your taxes at the cash register when you buy things. Much
Right.
easier.
That's right. Exactly.
Now, yeah, and of course it cost me some money to do that. So there's again that you wouldn't have to spend if you had the fair. Crazy. Okay, let's go ahead and we're going to start a series. I'm not sure how long this is going to continue on FairTax Power Radio. It just kind of depends on how long it takes us to get through it all. But again, we're going to go back to the white Boortz and Linder FairTax book. We'll go all the way to the back of the book this time because after all of the things that they did, they've decided, and they know that any idea like this is going to be met with resistance, that there are going to be people that will dishonestly, represent what the fair tax is and does and doesn't do or whatever. And then there will be people that just plain don't understand it. And so they have accumulated a bunch of objections and questions and objections that people may raise about the fair tax. And it's a good idea for those of us who are advocating for to understand what some of these questions and objections are and be able to deal with them in a coherent fashion. And so we're going to come up the first. This is really a question rather than an objection. People ask, how is the 23% rate decided? Do you want to work on that one?
Sure. From the FairTax book. For this, we go back to that group of Houston businessmen who first sat down to try to find a fair, reasonable, and efficient way to overhaul our tax system. After they settled on the idea of a national consumption tax, they sought expert opinions on how much that tax must be in order to duplicate the revenue the federal government would have received from the various taxes eliminated by the fair tax. In other words, it has to be revenue neutral. The researchers and analysts concluded that we would need an inclusive sales tax rate of 23%. Included. That's what the inclusive sales tax rate means. It's included.
That means for every dollar you spend, 23 cents of it is fair tax that goes to the government. So the price tag says $1, you spend $1, the store keeps 77 cents, and 23 cents of it goes to the Treasury under the fair tax.
That's right. A number of studies designed to verify and refine the figure are currently underway. This book was written back a long time ago. Some recent results suggest that with our growing economy and with new estimates of additional economic growth under the fair tax plan, the final inclusive rate could be a percentage point or two less. The end rate, of course, still holds true that it will be determined by Congress when the fair tax is implemented.
It's hard to believe this book is over 20 years old now. It came out in 2005.
Yes, sir.
And it's now 2026. But this you hear this all the time. Oh, but wait a minute. I've heard critics say that the tax will have to be higher, much higher. And usually in the same breath they say, well, you've got to exempt food, you've got to exempt medicine, you've got to exempt clothing, you've got to exempt all these basic necessities from the tax. And of course, when you do that, then the tax rate would indeed have to be higher than if they did that. But the fair tax doesn't do that. Simple. If you buy something at the retail level, new goods and services, you pay the fair tax. The fair tax you pay on your basic necessities, i.e., your spending up to the poverty level, is refunded to you. So you don't take anything out of your pocket until after you've met your family's basic necessities, feed the family before you feed the government. You get to decide what your basic necessities are, not some bureaucrat in Washington, D.C. Because all this idea that, well, if that rate is not good enough, it's going to have to be much higher, is just not telling the truth.
Yep. And folks ask in that same conversation probably, will the fair tax be increased over time or decreased over time?
Well, I mean, it will probably have to be adjusted. But if the fair tax produces the positive economic effects that economists all across the political spectrum again say that it will, if it stimulates the economy, is the rocket fuel for the economy that it seems to think it's going to be, then yeah, I would see how that the increased economic activity would allow for the decrease in the fair tax rate, a percentage point or two.
That's right. Well, let's look for a moment at the actual wording in H.R. 25. The fair tax bill includes a formula for setting the rate in future years. That formula is included in the bill for one simple reason: to ensure that the Social Security and Medicare trust funds are at least as well funded tomorrow, meaning in the future, as they are today. The goal is to keep any detractors from challenging the fair tax as a ploy to destroy or weaken Social Security or Medicare. And as long as the present funding levels for Social Security are maintained, those charges will not be able to stick.
Okay, let's move along here. This is one you hear all the time. Again, this is I don't know how much of this is just blatant, intentional, dishonest representation of the fair tax, and how much of it is just people honestly not understanding how it works. But you'll hear the thing, oh, mercy, this fair tax is going to increase the price of everything we buy by 23%. So if I go to the store now and I've got a cost $100, they're now going to charge me $123. Oh, no way that's going to work. And that's not true either. Again, we mentioned earlier that the fair tax is inclusive, meaning that it is included in the price that you see on the shelf. Same like it is at the gas station today. When you buy fuel for your car, right around it in Florida here anyway, where we're at, it's around $2.89 a gallon. Of that $2.89, a good chunk of that $2.89 is both federal tax and state tax that's
Right.
but you don't see when you get your receipt how much of that $2.89 a gallon you're paying for gas actually goes to the government instead of paying for the fuel itself. And the fair tax is going to work kind of like that. It will be included in the price. So if you see a coat on the shelf that says $100, you will pay $100 at the cash register when you do that. But you will see on your receipt that $77 of that stayed with the store. $23 of that was your fair tax. So it's included in the price, but you will see how much fair tax you're paying every time you make a retail purchase.
That's correct. And I've read another comment and question. I've read some critical articles claiming that the sales tax will really be 30% or more, not 23. Who's telling the truth?
Again, that depends on the difference between inclusive and exclusive rates. Steve Hayes did a chairman's report on this not too awfully long ago. Again, the fair tax is designed to replace the income tax, so it is quoted on the same inclusive basis as the income tax. If you say you're 25% income tax on $100,000 income, you send in $25,000. This means you keep 75. So it depends on whether you express the actual amount of tax paid as a percentage of what the store keeps or the overall that you have spent. So again, it's 23 cents on every dollar. So if you add 23 cents in tax to a $77 item to arrive at a $1 price tag, the 23 cents is about 30% of that 77. And that's the way state taxes work now. The sales taxes we're familiar with. If you have an item that says $1 and you got a 5% sales tax, they'll charge you $1.05. So the tax is not included in the price. That's the exclusive rate. But inclusive rate, 23% of what the store, 23% of what you spend total is the inclusive rate, and that's 23%. But again, if you look at that 23 cents in tax as a percentage of the 77 cents that the store keeps, it's 30%. So anyway, it's the same amount of tax.
We're going through the FAIRtax book, chapter 15. If you have it, it's the white covered book that's available on a lot of your online bookstores, and you can order it and have it, or you can get like a Kindle from Amazon and read it online. Next question.
Yeah, that's what you're doing, aren't you? You're reading it on. Hang on, I got to get.
That's right.
Mm,
Get online.
got to drink a cheer wine before we can move on. It says, well, isn't the fair tax really just a VAT, a value added tax like they have in Europe? And the answer to that is no way, absolutely not.
That's right. Value added tax is essentially a sales tax that is added at every step in the production of retail goods. The VAT is popular with politicians for the very reason that the people, we the people, should shun it. It's capable of producing huge amounts of revenue while remaining virtually hidden from customers, consumers, you and me. When a consumer pays for a product in a country that has instituted a value-added tax system, he has no real idea how much tax he is paying to the federal government. That, of course, is an ideal situation for politicians, since it's hard to resent a tax that remains invisible to the naked eye. But of course, it's a terrible situation for consumers, since the tax is so well hidden in the long line of companies involved in the manufacturing and merchandising process. It can easily be increased without undue public scrutiny. When VAT rates are increased, it looks just like another increment of inflation to the unaware consumer. Milton Friedman, the Nobel Prize winning economist, said it best: the VAT is the most efficient way to raise revenue for the government. It is also the most effective way to increase the size of government.
Oh, yeah. And again, it is central to the design of the fair tax that it is added only once. Your VAT is added, the guy who sells the seed to the farmer, there's the VAT there. The farmer grows the crops, it goes, all down the production chain of any and every product that is made. I mean, tractors, cars, airplanes, whatever. The value added tax is added at every step of the production chain. And it all rolls down to the end consumer anyway. But the fair tax eliminates all that junk that the producers along the production chain have to deal with. It is levied one time only, paid by the retail consumer on new goods and services. And so, no, it is not added up as you go along. It is paid one time by the retail, and if the thing is sold again as a used item, no fair tax on that. Once and only one time. And so it's just a lot cleaner. It's a lot harder to evade. I mean, can you imagine some of the shady bookkeeping that goes along in the production chain now, trying to get avoid the VAT tax? I mean, again, you need to go back to the archive of chairman's reports that Steve Hayes wrote. He addressed this a while back as well, that there's an entire industry in Europe and these countries where they have a VAT that's designed to cheat the system. It really is. That was another fairly recent chairman's report. Go check that out.
Here's a comment and a question that comes from the book. You say the fair tax is also going to replace the alternative minimum tax, which we're all very much aware of. What's that all about?
Well, all about is that the fair tax replaces all income-based taxes. Of course, the alternative minimum tax was hatched because some of the people, again, I mentioned Donald Trump as an example. When his tax returns were leaked, they were trying to show how little amount of tax he paid. They're trying to say, well, if these ultra-rich people can find so many deductions and so many legal ways to reduce their taxes, we're just going to throw that all out the window. And if you make X number of dollars, you have a minimum tax that you're going to have to pay, regardless of how many other deductions you may legally qualify for. And yes, that is an income-based tax, and that goes away with a fair tax. All income-based taxes are replaced by the consumption tax that is the fair tax. Your capital gains taxes are gone, your estate taxes are gone, Individual income taxes are gone. Corporate income taxes are gone. I mean, it's just a nice long list of things that are replaced by the fair tax, and it works really well. So you don't have to pay all that other stuff.
And the best thing about it too is you get instantly a raise on your paycheck, because all the federal taxes that are there will be eliminated. So instead of gross X amount of dollars, net Y, you're going to get Y is going to be a much larger number because the federal taxes are not going to be taken out anymore.
Yeah, it's interesting. Again, reading from the book here, the alternative minimum tax was introduced in 1969. It is they call it a spike tax. Seems that some politicians didn't like the fact that just a few years earlier, 150,000 high-achieving individuals rudely took advantage of the perfectly legal deductions and credits available to them and paid no federal income tax. Whoa, can't let that happen. Everybody's got to pay taxes, even when the law says you don't owe any, unless, of course, you're poor. And so the alternative minimum tax was passed to force a second calculation of your earnings and deductions. How does it work? If taxpayers' deductions exceed a certain percentage of their gross income, they lose their deductions. That'll teach them. So again, that is just more complicated, stuff into the tax code. You got to figure your taxes one way, and if it meets a certain criteria that you don't pay enough, then you got to go back and calculate it another way. And then the IRS comes back at you and says, you did it wrong, and the whole system needs to go away. I tell you, that's going to have to do it. We're just about out of time. We can't pick up another question. We will pick this up again next week on FAIRtax Power Radio as we go through the questions and objections section, chapter 15 of the White FAIRtax book. If you do not have a copy, I suggest you find one somewhere. I imagine you can get them off of eBay somewhere or probably off of Amazon maybe. And check this out. It said again it was written in 2005, but it is still just as relevant today as it was when Boortz and Linder first wrote it.
Not much has changed with with HR 25, if anything at all. I think we've just, the volunteers with the fair tax and those of you that are following have sort of figured out, hey, this is something that needs to happen. I see more commentary online on social media that are positive about the fair tax, with more people other than just the few of us and maybe several hundred other people that are really starting to make comments and ask good questions. And for that, we are thankful.
All right. And that is going to wrap up this edition of FAIRtax Power Radio, as we are slap out of time again. We will see you again, same time, same channel next week. Till we meet again, I'm Bob Paxton.
Bob Scarborough.
We are the FAIRtax Guys, reminding you the fair tax is the only truly fair tax, and once you understand it,
demand it.
So tell me, how could I pay less taxes?
Less?
Yeah, I'm trying to get ahead, so how can I pay less?
Well, I suppose you could pay less taxes by earning less money, or you could give to charity.
How is that going to help?
Actually, I'm not supposed to tell you this, but if you know the right people, okay, or if you have a really good lawyer, you can usually get around the big ones.
If I may, under the fair tax, to pay less taxes, you would simply consume less. You would control how much you pay and when you pay your taxes simply by choosing what you purchase and when you purchase something.
So I could stay focused and get ahead.
Exactly.